Hey guys, what's up? Hello, folks. Yeah, wow, it's later. Than the time I promised in order to start the live stream today, and I messed up the links, guys. I'm sorry about that. Yeah. So I shared with you the link of my live session today in Spanish. I am very sorry about that. So yeah, I guess that I still have a lot of people watching the stream in Spanish. Yeah. But it's a recorded stream, so I am not live. That's from today at 9 a.m. Hopefully they notice that they are watching the wrong thing and they see the right link. I'm sorry, I messed up, guys. It is what it is. It's been a long day, right? For everyone out there. If you are actively trading the market, it's been a very long day. So yeah, let me see. Is everything good with my audio? Yeah, I fucked up, guys. Sorry. I am very sorry. We have so much to talk about, huh? Yeah. Oh, thanks, Jose. Appreciate it, bro. Yeah, I can tell. I didn't have many people watching the stream, so that implies that most of the people must be must be watching the other live stream and trying to do. They gotta be trying to figure out what is going on here. Yeah, because when I go live for you for the members of both servers, Christians and mine, in English, I'm speaking English, of course. So what's up, folks? Hello. And shall we say, what a day, and what a day it was. Take a look at that. A bloodbath. I mean, if I say a bloodbath, I am probably exaggerating a bit, but it was a red day across the board. Big time. And now the question is this the beginning of a correction? Is this the beginning of a better market? And whenever the markets behave like this, guys, you need to be ready. You have to be ready to short the tape and also go long and take profits very quickly, huh? Yeah. Today, by the way, I took a day trade with the members of our Discord in English with triple Q calls. And I locked in the profit very quickly. And some of the guys were asking me, hey, why are you taking profits so quickly? Take a look. Mm-hmm. Yep. So, wow. It's ugly out there. And on top of that, guys, Amazon just reported. And it's going down after hours. It was a decent report. I actually took a day trade with Amazon when it hit $198. That was the expected move. I was able to play the bounce there at $198, but the capex came out like super higher than expected. And now it turns out, guys, that the markets hate artificial intelligence. They hate it. They hate artificial intelligence. Yeah. If you're investing a lot of money on artificial intelligence, you're being punished. Severely punished. Do you guys remember all the negative narrative that we saw last year in Apple? Oh, Apple is not investing enough in artificial intelligence. Oh, Apple is behind everyone else on the AI race. And who could have thought, guys, last year that the situation was going to flip over in a way that, I guess that nobody expected. So now if you are investing a lot of money on artificial intelligence, you're being punished. And those companies that are not investing on artificial intelligence are being rewarded. Take a look at what happened today with Apple, guys. This is impressive. Look at Apple. I think that Apple closed in the green today. Apple closed flat, guys. On a day in which the average tech stock out there got annihilated. big time. Let's take a look at what is going on in the case of Amazon, guys, after hours. Let me show you here a 1 day, 1 minute chart. I mean, I don't even need I don't even need to show you guys a 1 day, 1 minute chart. Take a look at this. Ugly, ugly, ugly. And you may ask, was the report this bad? Take a look at the report, guys. Let's take a look. Let me take a screenshot of this. Take a look at the report. So sales were expected at 211 billion, and they did 213 billion. So they beat sales very easily. They missed on EPS, not a big deal. $1.96 was the expected EPS. They did $1.95, a little miss. And something that is worth pointing out here is that Amazon got to this report, guys, with its cheapest valuation ever. Again, this company reported earnings today offering or reflecting or having its cheapest valuation ever. So we can make a case that the stock was not priced to perfection, but it's getting annihilated after hours. So revenue on Amazon Web Services up 24% year over year. The analysts were expecting a 22% year over year revenue growth on Amazon Web Services, so they also beat on this metric. But take a look at this, guys. Fiscal year 2026 capital expenditures. So the analysts were expecting capex to be at 100, or to be, let's say, forecasted for 2026 by the company at $147 billion, and Amazon is expecting to invest on capital expenditures on 2026 $200 billion. Unbelievable. It's crazy. Guys, in order to put this number into context, so yesterday Google reported earnings, and Google stated that, if I remember correctly, I think that's the figure. Google is expecting or is projecting to invest on 2026 or during 2026 $140 billion on capex. Amazon is doing $200 billion. So between Google and Amazon, they could be buying AMD. It's unbelievable. Yeah, $200 billion. The total market capitalization of AMD, Advanced Micro Devices, is $300 billion. So they could be buying AMD, and they will still have $40 billion left. It's crazy. The markets don't like this. Now, it turns out that they hate artificial intelligence. They hate it. Please do not invest in artificial intelligence. It's crazy. So it was a very good report. And this was like some sort of light at the end of the tunnel for the bulls today into the closing bell, because we had a very ugly close, and I will be reviewing that in just a second. So take a look at what happened today, guys. Russell 2000 down 1.79%, the Nasdaq down 1.59%, the S&P 500 down 1.23%, and the Dow Jones went down today 592 points, or 1.20%. So you can tell, and this is something that I was that I have been talking about with the members of our Discord in English, and also with with the members of Christian's Discord as well. Like, you could tell, guys, that the markets were kind of letting us know that they wanted lower prices. Take a look at what is going on with software stocks. It's an Armageddon, guys. They are getting annihilated across the board. All of them. It's insane. So today was like the final, not final, I shouldn't say final. So today was like the confirmation that we could be potentially entering into a corrective phase. So does that imply, guys, that tomorrow at 9:30 a.m., all of you should be buying SPY puts? Of course not. That implies that you have to be careful and that you have to be willing to short the markets if the corresponding technical conditions are met. That's what that implies. Take a look at these guys. So these are the 11 sectors that trade inside the S&P 500. All of them closed in negative territory today. All of them. Look. Materials down 2.68%. Consumer discretionary down 2.11%. Technology down 1.80%. Financials down 1.24%. Energy down 1.17%. Healthcare down 0.76%. Ugly. It's ugly. Take a look at this. Let's go see. Inside the S&P 500 today, we had 320 stocks going down and 181 stocks going up. Let's go see what happened inside the Nasdaq 100 or the Qs. 69 stocks going down and 32 stocks going up. And take a look at the Russell 2000, guys. Ugly, ugly, ugly. 1,354 stocks going down and 565 stocks going up. It was a massive sell-off across the board. And now, let's go see what is going on in the case of the SPY. Take a look. This is a 4-hour chart. And now we have technical damage. Look. We have technical damage. 20-day moving average broken to the downside. 5 DMA, the 5-day moving average in white, declining. Broken to the downside. The 50-day moving average, which is rising and could have acted as support today. I mean, it did act as support yesterday. It didn't do it today. Broken to the downside. And take a look at these guys. This blue line that you guys can see here, and we were talking, I was posting information on both servers, ours in English and Christians as well, during the trading session about the 100-day moving average. This moving average was broken today to the downside very easily by the bears. Take a look. Broken earlier on today, recaptured, and take a look at the spot at which, or up to, the SPY went today and fell at. And we will be talking about this level. Look, rejected here at $681.80. And then the SPY pulled back into the closing bell and the 100 DMA was easily broken to the downside. So what is the issue here, guys? Now we have overhead supply. We have market participants with unrealized losses. Not only on the SPY, on a lot of individual stocks. So what is the consequence of that? What is the negative consequence of that? That REITs tend to be sold. REITs tend to be faded. So what does that mean in practical terms? What does that mean trading-wise? That you need to lock in your profits quickly. If you're making money on a trade, you need to think that if that trade is going in your favor, so say that that stock is going up, you have people losing money at higher levels. So take a look at these guys. So this is our Discord. This is the Bilingual Stock Market channel Discord in English. So today we played a bounced here. Look, let me see if I find the trade here. I think I have it here handy. So, okay, look. This was at 2 p.m. No, sorry, it was okay, 1:50 p.m. Take a look. I told the guys at 1:58 p.m. getting triple Q calls here for the bounce, guys. Size the trade properly. We were expecting a bounce of this 100-day moving average that I was also, by the way, calling out in Christian's Discord. What happened here, guys? We got the bounce. Look, take a look at the bounce. So take a look at the sequence of the image of the screenshots that I am showing you. So at 1:50 p.m., going lower here, guys, 100 DMA test incoming. What is a 100 DMA? This is a 100-day, or this is a 100-day moving average. Take a look at the screenshot. I was pointing out this moving average, which happened to be a very important moving average. I told the guys, get in triple Q calls here for a bounce, size the trade properly, and I closed this trade, guys, making $222 in literally 5 minutes. A lot of the guys in the server followed this call out. But one of the guys asked me, why did you lock in the profit so quickly? What do you think that happened, guys? Why did I close the trade so quickly, guys? Because I know that there is a lot of overhead supply here. A lot. So what happened afterwards? Look. This is the bounce that we played into the closing bell. Look, this bounce ended up being faded. Easy. So one of the issues, guys, that you guys struggle with a lot is like when a trade goes in your favor, you get too greedy. You want to make a fortune out of a trade. This is a struggle that I am dealing with every single day with the members, especially with the members of our Discord in English. If you start a trade and the trade is going in your favor and you're making $200 right away, oh no, I want to make 500 or maybe $1,000. And especially, guys, in an environment of higher volatility, you have to lock in your profit quickly, especially if the trade goes in your favor right away. By the way, guys, and I guess that I must be sounding like a broken record, so you have to be aware of the inverse correlation between the VIX and the SPY. This is super important. So when you guys see the VIX, the volatility index, going up and the SPY going down, they are inversely correlated, I would say, by I would say that they are inversely correlated 60% of the time. So it's a very noticeable inverse correlation. Let's just put it that way, right? So if on any given day the VIX goes up and the SPY goes down, you cannot look at individual stocks. You cannot try to open positions on individual stocks without keeping an eye on the SPY and the VIX. Because when the VIX rises and the SPY goes down or the S&P 500 goes down, I would say that for the most part and in general terms, 95% of stocks out there are simply tracking the SPY, are simply following the SPY. So take a look. Let me pull up, let me zoom out here. So this is the VIX, look. VIX, volatility index. So take a look at what happened today with the VIX, guys. This is a 1 day, 1 minute chart. So take a look at this, the VIX. Let me pull up here a 1 day, 1 minute chart of the SPY. Look, they did exactly the opposite. Exactly. No doubt about it. Take a look. Now, for instance, let me show you this. So this is a SPY, right? So what happened today? Let me show you guys. So let's go ahead and reconcile a 1 day, 1 minute chart of the SPY with technical charts of other stocks. So let's go see. So this is a SPY. Let's go see what happened today with our boy Palantir. Look. It did the same than the SPY. The same thing. Look. Both did the same. So let's go ahead and take a look. Let's reconcile the SPY with. Okay, let me pull up the SPY once again. Let's go and reconcile the SPY with. Let me see what stock with AVGO. AVGO. Look again. This is a SPY. 1 day, 1 minute chart. Look, they did the same. For the most part. And I can keep. So I can keep showing you technical charts of other stocks and you will notice the correlation. So does this work out like this on every single trading session? Of course not. This situation takes place when the VIX rises and the SPY goes down. So you can, for the most part, and if you are aware of the levels of interest, support, and resistance-wise of the SPY, so you can trade or you can open positions on individual stocks, but always keeping an eye on whatever the SPY is doing. And the VIX. By the way, I was telling you this. Let me pull up here Christian's Discord. What is it at? Here it is. I was telling you guys, look. Keep an eye on the VIX. Keep an eye on the VIX. Keep an eye on the VIX. Look. What is it? I think that I said it on multiple occasions today, guys. Let me see. VIX, overhead resistance. Oh, by the way, take a look at this. At 12 p.m., take a look at what I told you. This is Christian's Discord. I am not liking this bounce as long as the bulls don't recapture $681.80. Take a look at the time, guys, at which I posted this call out in the Discord. 12 p.m. It's in the guilty until proven innocent category, I said. Take a look at the time. And let's go see what happened with the SPY. Let me pull up here once again the SPY. Look. So, the SPY failed at $681.80. This red line that you guys can see here, that I am pointing out with my mouse. So the SPY failed at this level, guys, at 12:46 p.m. Take a look at the post. 12:10 p.m. I am not liking this bounce. But you may ask, where did you get that level from? This was our pivot, guys. I always work with a pivot. In the case of the SPY, before the trading session opens. It's very important for me. So I utilize the pivot as a line, like a line in the sand that I utilize in order to try to, in order to try to figure out who is in control of the tape. Buyers or sellers, either buyers or sellers. So let me show you. I told the guys today, and again, this is our Discord of the bilingual in English, the bilingual stock market channel. So I said, look, let me see. Take a look at the time, guys. 9:27 a.m. Our pivot is $681.80. $681.80. And I said, take a look at the time, guys. This was pre-market. Very tricky open ahead of us, guys. I said we're opening below it. So we were opening, we were about to open the session today, and we actually opened the trading session below 681.80. If the bulls recapture 681.80, a potential rescue operation could start here. But that never happened. It never happened. So the second the SPY, guys, was not able to sustain price above this level, it was under the control of sellers. This is what happened. Yep. And you guys have been asking me about the moving averages that I use. So this is a very important moving average, guys, the 100. It is. Take a look at how it was broken to the downside here. It acted like some sort of a magnet. It was recaptured. And take a look at this bounce, guys. Clear bounce of the 100 DMA here. And this is a level that I pointed out for you guys in Christian's Discord today as well. Let me see if I can see it here. Take a look. So, I said, look, at 1:29 p.m., in case of a further pullback, we're looking at $677.50 for potential support. I said this at 1:29 p.m., guys. And look at your $677.50. Look. 60 cents. Where did I get this level from? From the 100-day moving average. This is a very important moving average, guys. So, and I know that many of you guys use very weird moving averages. You use exponential moving averages, and you use simple moving averages, and you guys use a lot of very weird moving averages, and most of you do not understand what moving averages you're utilizing, but you should be using daily moving averages. And if any exponential moving average or if any simple moving average on whatever weird time frame you use is working out for you, then keep using it. That's what I always say about technical indicators. Whatever is working out for you, just keep using it. But I don't understand, guys, how people that are actively trading the markets don't use daily moving averages. I just don't get it. I don't understand it. For real. I just don't get it. So, let me see. 1:29 p.m. I said. Okay, let's reconcile that with the time. Look, guys, take a look at this. 1:29. At 1:29 p.m., the SPY was trading at $679.86. And I warned you guys in Chris's Discord that in case of a further pullback, this level could act as support, and it did, guys. $677.50. It's not rocket science, guys. It is a 100-day moving average. Take a look at this. Let me pull up here a 4-hour chart. Look. So, this is the first trading session that the S&P 500 or the SPY has closed below the 100-day moving average since, take a look at this, guys. I need to pull up a daily chart. Let me see. I cannot. So let me see. Look, this is the first trading session, guys, today, February 5th, 2026, that we close one session below the 100-day moving average since September 5th of 2025. So, in the case of the SPY, the bulls need to recapture this level tomorrow, guys. It's imperative. If tomorrow we open the trading session below the 100 DMA, which looks like a potential scenario, right? It looks likely as of now. And the bulls cannot recapture that 100 DMA, you have to be ready to short the tape. Or if we happen to see a bounce, an overnight bounce, it could happen, and the SPY makes a test or goes up, and yeah, let's say that it is making a test of this 100 DMA, and you guys see the SPY struggling at bursting above or at taking out that 100-day moving average, that could be a short signal, guys. Yeah. So I warned you that this intraday bounce that we saw was a potential dead cat bounce. I called it out, guys. It ended up being a dead cat bounce. I told you, be careful here. I wasn't trusting the tape. Where was that? Look. The SPY is trading as of now below the 20-day moving average. The 5 DMA in white is starting to decline, and we are also trading below the 50-day moving average. So the SPY as of now is guilty until proven innocent. No doubt about it. It is guilty. So, yeah, keep an eye on the pivot level that I point out pre-market. I mean, I do it very early for the members of our Discord, of the Bilingual Stock Market channel Discord, but I am also, guys, take a look. Come on. My boys and girls of Chris Saints Discord. I am very active here also. Talking to you through the trading session, okay? So, yeah. The SPY isn't looking good. It isn't looking good. But we'll see what happens. And Amazon keeps going down, right? Yeah, 199. Look, it is going down. It was a good report, but CapEx is absolutely out of control, guys. So now it turns out that they hate artificial intelligence. So what do you know? Okay, guys. That being said, I can go ahead and take a look, or I can, do technical analysis on some stocks. But again, any technical analysis that I can do for you today is subject to the general conditions of the markets. All right. So if the SPY keeps rising today, the SPY keeps going down tomorrow, guys, and I don't know. I do a technical analysis on SoFi. If that is the case, guys, remember that the potential levels of support or resistance don't act the same way as usual when we are trading within a high volatility environment. All right? Any questions, guys, about all of this? Before I take a sip of, what is this? Sprite. Are we here on the same page? Please drop a comment down below and let me know what stocks you want me to go over then. Yeah. It's ugly out there. Clear as day. Awesome. That is the idea, yeah. So, let's go see silver. SLV. Sure. So, yeah, silver broke the 50-day moving average. I would tell you guys to keep an eye on the US dollar, the DXY. This is the main reason why precious metals are going down. Take a look. So it's very difficult, guys, to do a technical analysis on isolation on precious metals without taking a look at the DXY, at the US dollar. Take a look, it's going up. This is the reason why both GLD or gold and silver are going down. This is the reason. So, before doing a technical analysis on SLV, you need to keep an eye on the US dollar. It's about to make a test of the 20-day moving average here. 98 points. So say that the DXY fails at bursting above this level. So this could be attracting buyers into the technical shares of silver and GLD. And if you are trading SLV and GLD without keeping an eye on the US dollar, you have no clue about what you're doing. Because these two, or any precious metal is inversely correlated relative to the US dollar. So I can tell you guys, like, okay, look, say that silver recaptures the 50-day moving average and consolidates above $70. That could be attracting buyers into this technical chart. Or say that I tell you, if silver keeps pulling back, it might be bouncing off this rising 100-day moving average at $56. If the US dollar is going up, forget about these levels, guys. Yeah. So, again, it is very difficult, guys, to do a technical analysis on isolation on silver and gold. Because as of now, guys, since the DXY is going up, because if the DXY, if the US dollar was trading sideways, then I can go ahead and do a technical analysis on GLD without keeping an eye on the US dollar. But take a look at the movement, guys. To the upside that we are seeing in the case of the US dollar. What is going on here, guys? Are the markets expecting higher inflation? And maybe is that the reason why the US dollar is going up? I don't know, guys. Maybe not today. So today TLT went up. So this doesn't match a potential scenario in which inflation could be going up. But TLT is a bonds ETF, guys. And you guys should know, I guess, that bonds are inversely correlated to bond yields. You should know that. But TLT still looks ugly from a technical standpoint. So we cannot make a case that the US dollar is going up not based on inflation fears. So, and of course, I will not be talking. I'm not going to be talking here about, macroeconomic data and stuff like that, right? But so it is eye catching, guys. The rise on the US dollar is eye catching for real. So keep an eye on this ticker, DXY. This is the US dollar. If the US dollar cannot burst above this 20-day moving average, we could see gold and silver catching a break, guys. Yeah. In the case of silver, and again, in strict technical terms, without, taking into account the performance of the US dollar, SLV could be coming across with buyers at the 100 DMA, $57. Or, preferably, I would like to see silver consolidating above the 50 DMA, which was very easily broken to the downside today, guys, at $69. So that's all I can say. And in the case of GLD, let's go over GLD right away, guys. GLD is at a very interesting level here from a technical standpoint, guys. Look, we have the convergence of the 100 and the 50, the 20-day and the 5-day moving average. So the 5 DMA in white and the 20 DMA in pink. Look, take a look at this. They are coinciding at exactly the same level, guys. $444. So say that you guys see the US dollar going down and GLD being able to recapture $444. That situation could be attracting buyers into this technical chart, as I always say. Yep. Palantir, bro. Not much to say here, bro. I mean, it's a software stock. I mean, it's been an obliteration on every single software stock. Yeah, the report of Palantir was unbelievable, but they don't care about earnings reports now, bro. Guys, when you start to see that most of the companies, and I think that all of the companies that are reporting, regardless of whatever they report, go down, that is usually signaling that the markets are screaming for a correction. That implies that the markets are exhausted. That no news can push a stock into the upside. And that's what we have been seeing so far. Guys, I have been actively trading earnings reports during many years. I always buy out of the money calls expiring on the upcoming Friday. That's bullshit. I don't do that. And you shouldn't be doing that either. I wait for the report to come out. I already know what the expected move is going to be. And if the report comes out better than expected, and if the stock either pulls back or doesn't exhaust the expected move to the upside, I buy shares. I've been doing that during many years, and I just did it with Amazon. I just took a day trade, guys, on Amazon. With Amazon at I entered at $198. Yeah, you don't do that. If you do that, if you gamble on earnings, you will be out of business sooner than you think. But again, so let me tell you this. So yesterday, Elf Beauty reported earnings. Here, Elf. Guys, this report was phenomenal. They killed it. But they killed it across the board. So I have a tier on the Patreon in Spanish that is exclusively dedicated to earnings reports, right? So this company, I mean, this is laughable, guys. So when the report came out, Elf was trading 65% of the highs. I knew this because I do my research work ahead of time. So okay, so the report comes out, guys, yesterday. I was out of my studio. I was at a coffee shop nearby. So take a look at this. The report comes out. The stock went up to 90. It went up to almost 100 and something bucks. So it was about to make a test of this blue line, the 100-day moving average. Let me see if I can show you guys. No, I cannot see it here. Let me see. What about a 10-day? Okay, no, not even there, right? I mean, whatever. I don't find the technical chart. So here's the deal, guys. It goes up. I know that the stock is 65% of the highs. So I tell the members of the tier 4 of my Patreon in Spanish, like, hey guys, the report was phenomenal. They add up guiding, and the expected move was like $15, and the stock was up like $10. So I tell them, like, I am grabbing here 50 shares because I think that the report was very good. The stock is 65% of the highs, so I think that it could keep running. So I purchased 50 shares of Health Beauty, and I had to do a Zoom call that took me an hour and a half or something like that. So I couldn't, follow on the trade. I purchased 50 shares, so I had the Zoom call, and when I finished the Zoom call, the stock was trading at $87. I was like, what happened here? They killed it. This stock is 65% of the highs. What the fuck? So I ended up purchasing yesterday. Once I was done with the Zoom call, I ended up purchasing 50 more shares. So I averaged down, and I ended up having an average price of $92. And today, as soon as the trading session opened, guys, I closed the position here. Lucky enough, because the stock collapsed. And this was a very good report, guys. So, I don't know. I mean, take a look at Eli Lilly. They reported better than expected, and take a look at this. The stock collapsed. Take a look. SanDisk. They reported like, I don't know, one of the best earnings that I've ever seen. Look. It gave it all back and then some. Guys, the earnings report of SanDisk was like one of the best earnings reports that I've ever seen. The stock gave it all back, the whole thing, and then some. So, when you guys start seeing this kind of pattern, that implies that the markets are exhausted. I cannot keep going up. I need to go lower in order to look for liquidity, fresh money that could be attracted into the markets because of more attractive multiples. So we'll see what happens, guys. I mean, I am a technical trader, so I always base all of my trading decisions based on the technical charts in front of me. But as of now, I am being very careful here. Very careful here. So yeah, Palantir killed it. What do you want me to say, guys? When is Palantir going to be coming across with buyers? When the markets come across with buyers. Yeah. If the SPY keeps going down tomorrow, guys, Palantir will follow suit. Yeah. That's it, guys. And I just showed you guys the correlation between Palantir and the SPY today. Look, the technical chart is absolutely broken. So Palantir is trading as of now, guys, 43% of the highs. So ideally, guys, when you're trading with a very clear downtrend, such as the case of Palantir, you have to wait until buyers step in minor time frames. So the technical chart starts to look a bit better, at least in minor time frames. So say that maybe Palantir recaptures 136. This is a previous resistance back from early June of last year. Also a previous support back from mid-June of last year. So wait until buyers step in and show, some sort of interest for Palantir. But so there's nothing wrong going on as of now with Palantir, because this is an issue that is affecting most stocks out there. And take a look at the software ETF, guys. Look, this is an ETF of software stocks, IGV. By the way, let me reduce the size of my screen so you guys can see the tickers. Look, there you go. IGV. Take a look at this disaster, guys. This is not a stock. This is an ETF. This is an exchange traded fund, guys. What stocks do you find inside the IGV? Microsoft, Palantir, Salesforce, Adobe, Fortinet probably. Take a look at this. So again, guys, it is difficult to analyze these stocks on isolation. It is difficult because the markets are going down as a whole. It is very difficult. So what I would tell you, and if you're interested in buying the dip on Palantir, you need to wait until buyers step in minor time frames. If buyers step in minor time frames, then you don't need to do the heavy lifting. So you don't need to guess the bottom. You wait until other market participants guess where the bottom is in, and once the technical chart starts to look a little bit better, then you can maybe buy the dip. But the stock is 45% of the highs. That's what you do, guys. So don't try to be a hero here, guys. Yeah, don't try to be a hero here. You have to wait and understand that the technical chart is absolutely broken. I mean, I don't know, unless you had a Palantir bull. That's a whole different story, guys. So if you had a super Palantir bull and you believe that Palantir is a future, bro, and you believe in everything that Dan Ives says, then you buy the dip. Yeah. Guys, you know that I met Dan Ives last year at the New York Stock Exchange. Very nice guy, by the way. Very, very nice guy. So I was kind of, I was asking him about the multiples, the very high multiples of Dan Ives, about the very high multiples of Palantir, and he told me, we had a one-on-one conversation at the floor of the New York Stock Exchange, and he told me, bro, forget about the multiples. This is the next Microsoft. Don't make a mistake and so do not analyze Palantir based on multiples and valuation metrics and stuff like that. This is the next Microsoft. I mean, so if you believe that Palantir is a future, bro, maybe you can buy the dip here if you want to hold Palantir shares for the next 10 years. I don't know. Let me show you this, guys, by the way. This is interesting. So take a look. So this is a very, this is a stock that trades on or with very high multiples. But take a look at this, guys. Let me refresh this quickly. Hold. So take a look at the forward P ratio, guys. So the stock is trading at 98 times forward earnings, which is an insanely high forward P ratio, right? But take a look at how this forward P ratio of 98 is not very high for Palantir relative to itself. So Palantir was trading at 191 times forward earnings in December of last year. Now it is trading at 98 times. So, I mean, if you liked Palantir at 191 times forward earnings, maybe you like it better at 98 times forward earnings. I don't know. If you had a Palantir bull, right? That's what I'm saying. So, a forward P ratio of 98 is not really that expensive. The price to sales is at 73. Very high, of course, in general terms. But the price to sales was at 94. This is a correlation between the market capitalization of the stock relative to the trailing revenue that the company makes. And I don't know. I mean, if you like the company here, maybe you can give it a shot. I was taking a look today, guys, at CrowdStrike. This is unbelievable, guys. Take a look at this. I don't know what is going on here, guys. I mean, I gotta tell you, and I was talking about this with the members of our Patreon in Spanish during my live session today. And it was like, guys, so this is the most important cybersecurity company in the world. We're talking about cybersecurity, guys. Which, I don't know, maybe in my opinion, maybe some of you guys could agree with me. Like, if artificial intelligence gets better and better and better over time, so we'll be more dependent on cybersecurity, right? Take a look at this. Unbelievable. Brand new 52-week high, and CrowdStrike, again, guys, this is the most important cybersecurity company in the world. The stock is trading 34% of the highs. No mercy. Why? It is a stock that trades at or with higher multiples. That's it. Can you buy CrowdStrike here for the long term? Yeah, maybe if you like the company. Maybe you can buy it here, but you need to be aware of the fact that the technical short is absolutely broken and that lower prices are likely. That's it. Is there something wrong going on with CrowdStrike? Of course not. Take a look at these guys. CRWD. Let me show you. So take a look. Let me see. Financials. Look. Take a look at the revenue growth of this company, guys. Do you think that there's something wrong with CrowdStrike, CRWD? So every single blue bar that you see here represents a quarter. This is the revenue. Take a look at the revenue growth, guys. Unreal. An absolute growth machine. Let me show you net income. No, let me show the, let me see. The company has a cash position of $4.8 billion and no long-term debt. A year-over-year revenue growth of 22%. The stock just made a brand new 52-week low. So, sometimes the net aggregate opinion of the markets, guys, is seeing something that you cannot see at face value. So that's what we use the technical charts for. So basically, guys, this is so there are two potential scenarios here, obviously. Either this is an overshoot, this is an overreaction of the markets, or that is a danger, that is a risk. The markets are kind of perceiving that something wrong is about to happen. And that's why CrowdStrike and every single software stock is in a major downtrend. So you have to wait until the technical charts start to show a little bit of life. Unless, I don't know, you're a long-term investor and you like CrowdStrike, you like CRWD, and you believe that this is a buy the deep opportunity, then be my guest. But again, guys, it is very difficult to analyze stocks given the current circumstances, because every single chart, I mean, in the case of software stocks, for the most part, every single chart looks like this. Earnings ratio, 328. Yeah, it is a stock that trades at very high multiples. It is, for sure. Yeah. But I know stocks that I know a lot of stocks that do not trade with, very high multiples, and they're getting annihilated regardless. Yeah. So my advice for you guys would be focusing on the SPY, S&P 500, the US dollar. If you see profits, take them quickly. Don't hesitate. If you see a trade going in your favor, and let's see what happens, guys. It's ugly out there. It is very ugly. And again, when you are trading in an environment of very high volatility, so the SPY has to be your guide. Apple is the only one, the only Max 7 stock that is looking decent. We can make a case that they are not investing, they are not going guns blazing, investing on artificial intelligence. Yeah. What does it mean to have a negative PE? That you didn't make any profit either on the last reported quarter or during the last year. Usually, when a company doesn't make any profit during the last year, you don't see the PE ratio. See what I'm saying? And if you happen to see a negative PE, that implies that the stock probably posted only one negative quarter in regards to net income. Oh, but in the case of CrowdStrike, they are. So let me see something here, guys. Now, they have been losing money during 1, 2, 3, 4, 5 quarters in a row. Yeah, that's why you have a negative PE, right? Let me see the ratios. Yeah, no PE ratio. Look, there's no PE. Can you see what I'm saying, Sue? Look, no PE. Why is it? Because they have not been able to make a positive net income during the last year. No PE ratio. Look. So, if you see a company that has a negative PE ratio, you can take a look at the forward PE. If you see a forward PE ratio, that implies that the average analyst that is covering the stock is expecting the company to be able to make a profit within the next year. Let me see. Yeah, look. So the company is expected to go back to profitability in 2026. Sorry, in 2027. No, sorry, 2026, 2027, and on. Whenever you see a company that is losing money, guys, and you're wondering, like, hey, when is this company going to be able to make a profit? If you don't see a PE ratio, but you see a forward PE ratio, that implies that the company is expected to start making a profit within the next year. And in the case of CrowdStrike, yeah, I mean, they are expecting to be able to make a profit once again in this year, actually, 2026. Yeah. But the chart looks ugly, guys. So you need to get accustomed. You need to get familiar with the concept of the net aggregate opinion of the markets. So what is the net aggregate opinion of the markets, guys? That is basically the opinion of the vast majority of market participants. Thank you, T. Yeah. That's it. Easy peasy. So if you see a technical chart like Palantir's, what does this imply, guys? That the average market participant is not expecting, as of now, this could change, is not expecting Palantir to do well in the upcoming 12 up to 18 months. They could be mistaken. This could be an overshoot, but yeah, so bottom line, guys, you need to focus on the SPY. And you have me, and for that, I can help you guys out. So keep an eye on both servers, and let's focus on the SPY, and let's see, guys, if the S&P 500 can recapture tomorrow the 100 DMA. Here, yeah. This is critical. Yeah. It's critical. Yeah. Hood reports next week. What's your thoughts? So this is a crypto-related stock, Jose. If the markets keep going down, and you guys know what is going on with Bitcoin, right? Bitcoin is a disaster, guys. What a disaster. So look, Hood. It reports next week, yeah. The expected move in the case of Hood, let me see, Hood. Robinhood. Alrighty. The expected move is that is $11. So Hood could be going either up or down. How much did I say? $11. If I had to bet about a potential outcome, I would say that it's going down $11. Yeah, that's the expected move, $11. But what is the issue in the case of Hood, guys? So most of the revenue that they make Like an important part of the revenue that Hood makes comes from where? From crypto trading. Take a look at Bitcoin. So the markets are not stupid, guys. So the revenue that Robinhood makes comes from retail investors' long positions. Most of retail investors do not know how to short the markets, guys. Let's just face it. Most retail investors out there, when the markets started to go down, they don't know what to do. It is so. That's the way it is. So when the markets are going up, so awesome. That's very good news for Robinhood, because on the way up, everyone is making money. But since October of last year, guys, most of the very, very speculative stocks have been going down, guys. Have you noticed that? Aclo, Arcade Aviation, Jovi Aviation, Tesi, a lot of very speculative stocks started to go down in October of last year. And that's the sector of the markets from which Robinhood was making the greatest amount of money from. Needless to say, Bitcoin. And Robinhood is a crypto-related stock. So for Robinhood to catch a break here, guys, Bitcoin needs to recover. Go figure. Take a look at this disaster, guys. And well, the presidential pump and dump is over. It's over. The Trumps made a lot of money out of this, and they forgot about the crypto space. And take a look. 63,000. Unbelievable. So yeah, guys, this is not a regular live stream in which I can be reviewing or going over a lot of individual stocks. So we are dealing with a very specific market condition that that basically is demanding from us to keep a super close watch on the SPY, the VIX, and some other mechanical elements of the markets. And let's see what happens, guys. So let's see what the SPY does overnight. Not looking good as of now. So the futures should be opening in negative territory. And let's see if maybe the bulls can recapture tomorrow the 100 DMA, the 100-day moving average. Yeah. Zoom out at a bigger picture time frame. So yeah, of course. You can do that. Yeah. Some people say when in doubt, zoom out. Yeah. So keep an eye. So for the members of both Discords, Crescents and mine as well in English, keep an eye on the pivot tomorrow. Yeah, we might have some fun. Sure. We are, let me see, an hour and 3 minutes in. Thank you, guys. So, it is a very interesting market, huh? It is. So, I don't know, maybe the bulls tomorrow recapture the 100 DMA and we go back to all-time highs. You never know. So, I've been telling you this during many years, guys. Like, I am not in the prediction business. I am in the business of taking a look at the technical shorts and understanding the message that a technical short is sending me. Yeah, maybe this was it, guys. Who knows? Yeah, maybe for some reason that we don't know, we open on tomorrow's trading session above the 100 DMA, above $177, and most stocks started to go up, and the bulls also recapture the 50 DMA. And I don't know. Yeah, maybe we go back to all-time highs. That doesn't look like a likely scenario, but you never know. But the good news is that we have the technical. That's what we have the technical short for. Yeah, in order to lead our way. Thank you, guys. Enjoy the rest of your day. It's been a very long day for me, huh? Yeah, I need to grab a beer in 30 minutes. Cheers. Take care, guys. Stay warm. It's very cold here in Charlotte. Yeah, 30 degrees. Bye. Take care, guys. Good to see you. Bye-bye.